Greetings, members one and all of the Salivation Nation. Well, we've seen quite a dramatic shift of silver's price as of late, and it got me thinking about other wide movements of silver's price, and we're going to talk about that, the largest silver price moves in recent history. So let's explore. Silver has certainly been a very volatile metal, and we are seeing it move quite to the upside, at least as of the recording of this video. But nonetheless, it got me wondering about other large shifts in price for silver, one way or the other. We're going to talk about that here in this video. And I found an article here from SD Bullion, some great research by James Anderson here. We're going to look at how the market has moved and shifted throughout the last 50 years, or 51 years, now 52 years, but this is from 1970 to 2021. As you know, silver has served human beings as a store of value and day-to-day transactional money for nearly all of recorded human history. And that really has been the case all the way up until the time when they started this analysis, which is quite remarkable, I would say, because this is the time when silver was not used as transactional money. So it's quite going to be interesting to see how the prices have moved here. Silver and gold, the two historic monetary precious metals, underlie the most economic development over the last 5,000 years of written record keeping. And yes, indeed. And billions of people still in 2022, silver means money, either literally or informally. Now we typically call it commodity money these days, or I like to refer to it as dormant money. But nonetheless, fascinating indeed. And it goes on to talk a little bit about the history of the silver, and we've kind of gone over that. But let's take a look now at silver price history in the United States. Silver has been arguably price suppressed since the crime of 1873. According to SD Bullion, silver demonetization produced a slow-moving multi-decade market consolidation favoring elite Eastern creditor classes over Western debtor expansionists and labor. Silver fell in price from $1.29 per ounce to an all-time low of only 25 cents per ounce by the Great Depression of 1933. So that should give you some insight that, during the Great Depression, silver was actually very low, an all-time low of 25 cents per ounce. That's pretty remarkable. If you look at this chart of silver over the past, from 1720 to now, this is probably the longest window of seeing silver's prices that I've ever witnessed here. Look at this, pretty remarkable. You can see how it's been fixed and pretty flat for quite a long period of time up until that 1873 period here. And then we can see it shot up and then down, and mostly now it's been up. And can we contribute that to? Well, the Federal Reserve Act, which was in 1913. Yes, we've seen it quite depressed and pushed down because there's been some fixed ratios, where there has definitely been some manipulation in price fixing because they set the ratio between gold and silver, the price ratio, typically around 15 to 1. So once the U.S. Temporarily repealed foreign government trading partners from redeeming U.S. gold reserves with U.S. dollars, the U.S. dollar by default became a total fiat currency, but has remained dominant the world over. In other words, the globe has essentially been running an absolute fiat currency monetary regime, and one could argue scheme, since August 15, 1971, when the gold window closed. And the fiat Federal Reserve note has been the dominant fiat reserve currency since. So during the 70s, the U.S. suffered under high inflation and low economic growth, stagflation, similar to what we are suffering today. Especially that means more now, as this article was written, months ago. The fiat U.S. dollar price of silver ran from being priced just under $2 an ounce to nearly $50 an ounce by the start of 1980. So now we're going to look at the 10 enormous silver price fluctuations since 1970. The largest up and down runs mainly occurred after the COMEX gold futures trading began dominating gold and silver spot price discovery in 1975 and continued to this year. The silver spot price data also covers the entire full fiat currency era monetary regime going from 1971 to 2021. So the failure of the last central gold price fixing cartel, the London Gold Pool, by overwhelming free market physical bullion demand. There's a case to be made now in 2022, the potential of another run on physical silver and gold bullion. And some may surmise that when everything falls into place, the analysis of what happened with the most recent silver price could be the beginnings of that. I don't know. At least as of the recording of this video, I don't know. But it may perhaps cause another exponential melt up instead of the arguably suppressed silver and gold valuations at present. In fact, this article was written just before the silver squeeze that we saw in February of this year. Actually, well, there was one in February of 2021. There was definitely some of the ongoing demand that's continuing to this day. So there it is. So here we go. The top 10 silver price market moves, smallest to largest. There's a lot of information here you can see in these different places, but essentially you can see these are in as low as 2 to 6 and 7 day increments, where it went down 12.5, 18.1, 19.6 we're seeing. 23 days down 57%. So a lot of different wild movements here in the downwards direction. And down over 12% on a run, down 15% on a run, and down over 30%. We can find that one there is right here in 1980. So these little spikes here are anomalies, and that is something to be wary for. If the price were to run up again like we saw during that period, we're going to see a massive downtrend here. The negative daily runs percentage down for the COMEX silver there in this chart here. So number 10 would be 27.4% in April and May of 2011. The silver bull ran from the post-global financial crisis of $9 per ounce and low in early 2009 to the $50 per ounce the silver run reached in April of 2011. The late 2010s had caught silver shorts and short bullion as both unsecured silver ETF inflows and silver bullion investment demand were squeezing out available silver industrial supply levels. The run occurred after J.P. Morgan recently inherited the bankrupt Bear Stearns silver trading desk in the spring of 2008, and many of its former traders. They had learned how to game the silver price via spoofing and other manipulative tactics, and we've documented that here on this channel. And so there was that. And then number 9 was up 28% in August 1982. Often after a manic blow off top run in price for a financial asset, it takes some time for the despair phase of the bear market that follows. In the summer of 1982, silver had found its downside overshoot around $5 per ounce, having been near $50 per ounce only after 2 years and after a few months prior. The rally that followed June 82 low for silver price at around $5 per ounce was followed by a big move in August and a series of rallies throughout the end of the silver trading there. And there you can see that. And number 8 is up 28.1% in September of 1980. So having begun a bear market that would last for multiple decades, the price bounces following early 1980 were still record price high for silver, giving bulls the ability to profit in short and even medium-term trades in months. Trouble was, back then, for delusional bulls caught in a typical bull trap after price manias, anyone going long for a long-term trade in silver bullion was in for actual painful years of valuation performance that followed. This is the psychology of the market during the silver bubble of 1980. This chart right here is something we can learn from. In fact, I'm going to see if I can blow this up a little bit here so you can see it more clearly. This is absolutely crucial to study this chart. We have the stealth phase, which is kind of where we have been, especially in the mid-2015s, and in the awareness phase, we're starting to see that now. And then we fell into a bear trap recently. And who knows? This could be the beginning of a mania phase. I don't know. It could very well may be the awareness phase, at the apex of the awareness phase, maybe redoubling its efforts again. But it could be that we could see this start to rise, and it gets the attention of the major media. Then you get enthusiasm, and then you see where greed comes into play, and then delusion as people buy all the way up to the top. And what is that thing? Buy high and sell low. And that is the last thing you want to do, that's for sure. That's why I'm always stringent of being not letting fear drive your purchases. Do not be bound by FOMO, fear of missing out. In fact, people get a kick out of it. They get a rise out of it. That's what I call FOMO sexuality. Yes, indeed. Then you get a new paradigm, and then the denial that it could go down, but it indeed does go down. Fall into a bear trap, then a return to some normalcy, and then you've got fear selling, capitulation, and then despair, where it just goes right down. It just tanks. And we saw that time and time again during this bull trap here. And then we finally get some recovery, and then this fall back out here. This up here is, by the way, is a dead cat bounce. This return to normal phase. We saw the massive dead cat bounce there. And so that chart here we could really learn from. This is about being realistic about silver, and I'm very glad that SD Bullion showed that and to be able to explain what's happening here during these phases here. And the blow off phase is the one that's the worst. You want to see here. So number 7 is a 38.8% rise in April 1974. We've seen these big jumps here in September 79, 31.6%. And we go down here, we see all of these data. The percentage up runs between 17 and 6 days, 4, and look at that, these massive jumps during that time. So a lot of exciting periods during this time between 1970 and 2020 with these big drops here, very well showed here in these charts. Number 5, a 36.1% jump in January of 1980. And again, September, a 37.4% jump. But moving on down here, look at number 3, a 55.2% jump in June 1980. Every collapsing exponential price run finds a bottom, and dead cat bounces back to a lower high. This June 1980 bounce saw silver prices run from a previous end of May low of near $11 per ounce to just over $18 by the end of July 1980. Silver bulls enjoyed a 12-session straight run of positive gains during the in-between trading sessions after seeing the silver market fall by nearly 80% throughout the last approximate 4 months. Silver had only been found at an interim bottom. So this is that dead cat bounce. It would just take over another decade for silver to find its $3.50 per ounce floor in 1991, and another decade plus of time by 2003 when another silver bull market truly kicked off again. Look at this 56.2% jump in February of 1974. Wow. Silver had a horrible run to the upside in early 1974, a period not a lot of people talk about, completing a positive run for 17 straight trading sessions, resulting in a price climb from around $4 per ounce to just over $6.76 per ounce by late February, and then a record high price for silver. So that was quite a bull run, that's for sure. Amazing. And then number 1, March and April of 1980, the infamous big, huge jump here. From the middle of March to April 7th, 1980, the price of silver endured 23 consecutive trading days of losses, down 57% in value from the mid-30s per ounce down to the low teens in short order. Silver began the decade in 1970 priced around $1.80 per ounce, and by the first month of the following decade in 1980, it had reached a still record price point of around $50 per ounce by January 20th, 1980. Adjusted for inflation, there's nothing that has ever beat it. Allegations of market cornering, upside price manipulations, and a full-on public scapegoating of bullion stacking and leveraged derivatives COMEX and SI futures betting the Hunt brothers silver bulls would follow then for decades into the present day still. The fallacious notion that a few billionaire brothers and some Saudi royalty blew silver prices sky high in the 1970s is proven to be overblown for anyone who cares to look at the public records and research what happened. That's right. It was a little bit more to it than the Hunt brothers. Now, they did try, But from 1978 to 1980, the world witnessed a fiat U.S. dollar quadrupling of crude oil prices, a quintupling of platinum prices, and a six-folding of palladium prices, and a gold price spike from $200 per ounce in early 1978 to the then record of $850 an ounce by January the 21st, 1980. During the same time frame, silver went from $5 per ounce to as high as $50 per ounce on January the 21st, 1980, according to financial journalists who directly covered the specific silver price mania. What they believe contributed most to the then exponential silver price increase was not merely the Hunt brothers, but the collapsing fiat U.S. dollar's currency value at that time, causing most commodity prices to increase substantially near simultaneously in time. Now think about that for a moment. Almost a collapse to the U.S. dollar's currency value. That is a near currency collapse coupled with what the Hunt brothers did. But mostly that is what drove it. Not surprising considering the inequity from which the regulatory agency was born in 1975. The CFTC in 1980 sided with sudden exchange changed rule enforcements that benefited many of the COMEX board members that then caught short silver as the price was climbing a wall. The so-called Silver Rule 7 and Silver Futures Contract Liquidation Only Rule enactment favored the then silver shorts who, in conspiring so, basically capped the price of silver, but likely also thwarted the escalating gold price, which collapsed simultaneously months and years to follow. Pretty amazing indeed. Now, so that is the biggest drivers. Now let's see, one of the things we've seen with this most recent spike in silver's price that we saw very recent was quite intriguing because we saw almost a 9% jump in one day. And we're looking here at the closest data that has been researched here by Gold Charts US and put together by SD Bullion that we can see for about a 3-day run. And look at these numbers here for a grouping of 3 days. We can see some of these have went up well over 15% in some of these days during that time. Pretty amazing and dramatic moves in just that short amount of time. So you couple that, especially with percentage gains over 3%, 3 days or more to the down on a run, and then over 3% and under. So pretty dramatic moves we've seen, much more than what we saw today, or very recently rather. And so, we're kind of excited to kind of see these moves. And again, as in the recording of this video, we could certainly see it move in the other direction again. But nonetheless, it's fascinating and a well put together article here to give us some perspective of silver's moves in price over the past 51 years. So let me know what your thoughts are in the comment section below. This is really a great piece by SD Bullion, and I want to extend a multitude of gratitude to you all for taking the time to watch this video. And I want to encourage you to please rate, share, comment, and subscribe.